Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Tuesday, June 16, 2009. The moves we witnessed yesterday of strong dollar strength were reversed in many cases in today's trading. The euro-dollar pair found support around the 1.3750 level and rose 160 pips to the 1.39 area. That zone had acted as support last week, and so far today it has turned to resistance. The euro was boosted most likely by technical action following a strong move down yesterday, but also by a report showing German investor confidence climbing in May. That report, the ZEW Economic Sentiment Indicator, which measures investor confidence, rose for the 8th straight month, jumping higher to a reading of 44.8. It signifies that at least financial market experts see some optimism for the economy's recovery. The pound clawed back its losses from yesterday and was trading above the open for this week. The fall since Thursday's high near 1.66 was a 50% retracement of the rally seen last week. Not only was greenback weakness on display today, but pound strength came from an inflation report that came in higher than expected. UK annual inflation inched down to show a 2.2% gain in May, which was a smaller drop than forecast. The weak pound is keeping prices for imports up, while higher taxes also work their way into raising consumer prices. The rate of decline in inflation can give the Bank of England something to worry about, as it has stayed higher than originally expected. Inflation has now stayed above the central bank's target of 2% for 20 straight months. In the US, housing starts surged in May, climbing 17.2% as the annual rate of housing starts increased to 532,000 units. Could be an indication of a bottom, but February's similar jump was met by 2 months of declining starts, so you need to look at more incoming data. Prices paid to U.S. producers rose 0.2% in May, but that increase was smaller than expected. On the year, producer prices are down 5%, which is the largest annual decline in 60 years. The increase in the monthly rate was a result of higher gasoline prices. Excluding food and energy from the headline figure, prices fell 0.1%, the first monthly decline since 2006. U.S. industrial production fell more than expected in May as well, sliding 1.1% on the month. It's the 16th month of negative output out of the last 17 months. The data points to a continuation of the slump in manufacturing as consumer spending and business investment remains pressured. The flight to the yen as a safety this week escalated in Asian trading overnight. The dollar-yen pair broke a short-term level of support at the start of today's session and slid about 160 pips, a 61.8% retracement of the rally seen 2 weeks ago, prior to last week's consolidation. The dollar managed to stage a counter-rally following the New York Open and the release of U.S. data. However, that pullback was short-lived and the pair fell back towards the 96 level in the early New York afternoon. U.S. stocks, which started the morning higher, fell into the red during that time, encompassing the up and down movement seen in the pair. Similar price action was observed in other yen crosses, though here the Aussie yen pair managed to move above its open for the day to set a high near 78.40. However, the dive in U.S. stocks caused a second bout of risk aversion for today's session, pushing the pair back down below its open. Tonight, Australia will release a report on consumer sentiment and housing starts. Overnight, Switzerland posts its retail sales, the UK unveils its monthly data on employment, the claiming count change, and Europe reveals its trade balance. Tomorrow, the US will post its consumer prices and current account, while Canada releases data on its wholesale sales. And that's it for today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.